Welcome to the Ontario Mortgage and Real Estate Insights Podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamilton, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their home ownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Today, we're diving into how Canada's mortgage market is navigating the new trade war era. With the ongoing trade tensions, particularly with the United States, there are significant repercussions on the housing market.
That's right, Steve. The tariffs imposed by Donald Trump have certainly stirred up quite a bit of concern among Canadians. Home sales hit their lowest point in nearly 3 years this February, which is worrying for many prospective homebuyers and sellers.
Absolutely, Janine. The economic impact is palpable, with the Canadian economy losing about 33,000 jobs last month. Full-time positions took a particularly hard hit, though part-time employment saw a slight increase of around 30,000 jobs.
And Steve, it's not just about the numbers. The trade shock is much larger than anticipated, especially with tariffs affecting vital sectors like automotives, steel, and aluminum. These industries are the backbone of many communities across Canada.
Scotiabank's Derek Holt mentioned that while the Bank of Canada typically responds dovishly to such economic downturns, rate cuts might not be immediate. They're likely waiting for more data before taking action.
That's a prudent approach, but it leaves many mortgage professionals and their clients in a tough spot. The uncertainty is challenging when you're trying to plan for the future financially.
Indeed, Janine. Mortgage professionals are closely monitoring these developments to advise their clients effectively. The Greater Toronto Area, for instance, saw a significant drop in home sales by 23.1% in March, which has led to a decrease in home prices compared to last year.
Rasha Ingrata from Mortgage Intelligence has also highlighted the potential for a recession if these tariffs persist. It's a grim outlook, but it's crucial to be prepared for various scenarios.
There is a silver lining, though. Fixed and variable interest rates might eventually decrease as a result of this economic volatility. Historically, we've seen rates drop during times of economic instability, which could provide some relief to mortgage holders.
That's true, Steve. While falling rates can be a boon for those looking to refinance or enter the housing market, the broader economic implications can't be ignored. The potential job losses and the impact on communities reliant on trade with the United States are significant concerns.
Royal Bank of Canada has noted that the housing market will remain on edge as long as these tariff threats continue. Affordability issues might take a back seat in consumers' minds as they navigate these turbulent times.
It's a complex situation, and our listeners should stay informed and consult with their mortgage professionals to understand how these developments might affect their personal circumstances.
Confidence in the Canadian economy is taking a hit as recession concerns continue to mount. A recent report by the Bank of Canada highlights a significant drop in both business and consumer confidence. Janine, it's clear that the economic landscape is becoming increasingly uncertain.
It really is, Steve. The Bank of Canada's surveys show that a third of Canadian businesses now expect a recession in the next year. That's a substantial increase from the previous quarters, and it's no wonder given the current trade tensions and global economic challenges.
Business sentiment has indeed plummeted, with the Business Outlook survey indicator falling to negative 2.14 in the first quarter. That's the lowest level we've seen since the early days of the pandemic. Businesses are pulling back on investment plans, and hiring intentions have reached a 9-year low. It's a tough environment for growth.
Absolutely. And it's not just businesses feeling the pinch. The Canadian Survey of Consumer Expectations paints a somber picture on the household front as well. Job security is a major concern, with the share of Canadians feeling secure in their employment dropping to record lows. It's a tough time for many families.
The pressure is certainly mounting, and with inflation expectations starting to creep back up, the Bank of Canada is in a tricky spot. They have to balance supporting the economy while keeping inflation in check. It's a delicate balancing act, especially with tariffs and global supply chain disruptions pushing prices higher.
Right, Steve. Claire Fan from the Royal Bank of Canada pointed out that although Canada has been spared from the worst of U.S. tariff actions, the indirect effects are already making their presence felt. The costs are rising, and many consumers are feeling the strain on their finances.
And it's not only about the immediate costs. Long-term inflation expectations may be stable for now, but short-term expectations are climbing. This puts the Bank of Canada in a challenging position. Markets are speculating on a potential rate cut at the upcoming meeting, but it's not a straightforward decision.
National Bank and Royal Bank of Canada economists suggest the bank will likely proceed cautiously. While the financial conditions are deteriorating, the data does not yet fully justify a rate cut. It's a wait-and-see situation, and the next few months will be critical in determining the best course of action.
Let's shift our focus to the local real estate market, specifically in King, Ontario. Recent reports from the Toronto Regional Real Estate Board show a significant 25.3% drop in home prices in March 2025, bringing the average price down to 2.05 million Canadian dollars. Janine, this is quite a shift from the previous month.
It is indeed, Steve. A drop of nearly 700,000 Canadian dollars from February is substantial and reflects the broader economic challenges we've been discussing. Yet, it's interesting to note that compared to March 2024, there's a slight increase of 0.3%. It seems like the market is experiencing a bit of a roller coaster.
That's a good point, Janine. The number of home sales also plummeted by 46.9% year over year, with only 17 sales after an average of 41 days on the market. This slowdown in sales activity might be indicative of buyers' hesitancy amid economic uncertainties.
Absolutely, Steve. Fewer active listings, down 24.3% from last year, suggest that sellers might be holding off, waiting for more favorable conditions. It's a challenging environment for both buyers and sellers, requiring careful navigation with the help of knowledgeable professionals.
Drilling down into property types, detached houses in King averaged 2.59 million Canadian dollars, marking a 23% decline month over month. However, there's a 4.7% increase year over year. It's a complex scenario, and it highlights how different segments of the market are reacting.
That's right, Steve. Attached houses tell a different story, with prices up 4.4% from February, but down 3.8% from last year. And then there's the apartment-style condos, which saw a month-over-month drop of 4%, but a substantial year-over-year rise of 49.1%. Each segment seems to be responding uniquely.
It's fascinating to see these variances, Janine. Over the last decade, the overall market in King has grown significantly, with average sale prices for all houses and condos up 130.3% since March 2015. This long-term growth underscores the resilience of the real estate market, despite the current volatility.
Indeed, Steve. While current conditions are tough, it's important for our listeners to recognize the potential for recovery and growth in the long run. The market's historical performance suggests that with the right strategies and timing, there are opportunities to be had.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your home ownership goals. Catch you next time and stay informed with the latest industry insights.